Let's talk about the Federal Reserve because of that hiked interest rate, quarter point yesterday. Chair Jay Powell saying it is too soon to tell whether that hike would be the last. Joining us right now, former Federal Reserve Vice Chairman Roger Ferguson. He's now the fellow on the Council on Foreign Relations and a CNBC contributor. Good morning to you. Also, CNBC senior economics reporter Steve Leisman joins us. Given that you actually, I'm just going to go to Steve for a moment first, because you got to spend time and see the man in the flesh. I'm curious what your sort of takeaway was and whether you think another hike is coming or not, Steve.
I mean, I think it's possible. I think Powell was very much down the middle. I think he didn't say what he was going to do because he doesn't know what he's going to do. I'll set the stage a little bit. He's got a committee that pretty much wants to hike. I'm not sure the chair does, but I think the chair will guide and also follow his committee. And so I think the story here, Andrew, is that when he said he has time to make that decision, I would take him at his word. He has 2 jobs reports, 2 inflation reports. I think September is probably not going to happen. I think if there is going to be a hike, it's in November. And I think when I read the commentary out there, I've got folks who said, you know what? He was really dovish. It shows that second hike isn't coming. And then you look at the statement language, which had the same hawkish language that kind of presaged the July cut. And that tells them that they think they're going to hike. So I would just sit back, get a Gatorade, put your feet up and watch the data. And if the inflation data is soft, they're not going to hike anymore. And if it remains to be difficult or high, then I think the Fed might put another quarter point hike in there.
Roger, in agreement with Steve there? Not? What do you think?
I would say I'm in agreement with Steve. I think Chair Powell tried to leave the door wide open for either move at the upcoming meeting. He was very clear, as Steve just said, there's a great deal of data coming forward. They did ratchet up just ever so slightly their assessment of growth, which he recognized could perhaps be a precursor to the need to tighten more. But I think, as Steve said, it's wait and see moment right now.
Okay, let me
Too
ask
much
you
data
this,
to come and
Roger,
undecided.
How much of the fact that inflation has come down do we now ascribe to the Federal Reserve? You've already seen, even in the last 72 hours, a debate has emerged. I mean, a debate's emerged the entire time. But how much do we think this is the Fed doing this? How much do we think this is just this untangling post-pandemic that's happening? And how much of those things do you think actually converged?
So I think, frankly, they converge. So absolutely there is some untangling of a very complex economic situation, post-pandemic. A lot of uncertainty with the war obviously driving certain prices. Having said that, we know the economy was running hot. We also have to recognize, for good reason, I would argue, the government wants to make different kinds of investment that has proven to be, stimulative. We know that households had a great deal of pent-up savings. Some still argue they do. So, those economic factors, not the geopolitical ones, required the Fed to take action. And so I think it's a combination of both. And I think they're prepared to take the next move if the numbers come in, as some think they might, still higher than the Fed currently wants.
Steve, where do you land on that debate these days? I don't know. Did you read Krugman had an interesting column called Discombobulation, Recombobulation, and Disinflation, basically making the argument that the Fed made the right decisions, but it's not clear that those were the decisions that actually led to the cooler economy that we're now having.
Yeah, I mean, I think we can, dissect this, 6 ways to Sunday. I think the Fed is doing what it has to do. And I think, what does it have to do? It has to bring the real rate or the inflation-adjusted rate to a positive or restrictive territory in order to combat inflation. It's kind of like textbook central banking. And so whether or not it's responsible for the decline, you have all sorts of dynamics going on in the economy, all sorts, by the way, of different national security and other economic priorities that are manifesting themselves in the fiscal spending side. And I think that, we're all instructed by Robert Kaplan's discussion earlier this week that talked about the idea that there has been and remains a fiscal impulse in the economy, and that will work off next year. But, Andrew, I want to just throw out an idea that is, I want to run it by Roger, if you give me just a second here.
Please.
I'm not sure that the Fed is keeping alive this idea of raising rates in order to actually increase rates. I think what Powell and the Fed may be doing, and I think it's consciously, is trying to maintain current levels. And I'm sort of equating the Fed right now, or even Fed Chair Powell, with kind of like a jockey who's on a horse that wants to run. What is that horse? It's the U.S. economy. It's the stock market. And he does not want the market to begin pricing in at this time, given the uncertainty over inflation, either the end of rate cuts or rate cuts themselves. And so I think one of the things they do is they keep out there this idea that the Fed is going to perhaps raise rates in the future to keep the market on edge and keep it from pricing in those cuts, which now are in March and the market would bring forward in a heartbeat.
What do you think, Roger?
So I agree with Steve in part. The Fed has already says that it has a number of tools, and one of those is, what it says, what it signals, et cetera. As Steve says, trying to drive expectations, not just in the market, but also expectations for consumers around future inflation. So I think there's certainly, a grain of truth, more than a grain of truth to what Steve says. What they say is one of their tools. Having said that, I also think that they're not saying it purely as a signaling device, but they also are prepared, again, to hike, and we've seen them do it many times. So both things can be true. They want to manage expectations, and they want to be clear that, another hike is certainly very much in the cards, either September or November.